Hi everyone, welcome back to my channel. Today I have another recap for you on how I traded SPY and ES on July 28th, 2022. I picked this day in particular because I found that it ended up being a tricky day for many traders. Market net flow was confirming the move, but we'll get into why it threw off so many people in a minute. Before we get started, if you'd like to get a 10% discount for TradeView, don't forget to use my referral link in the description. You'll also find referral links for TradingView and Top Step funded trader programs that will give us both discounts. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. So you'll see on my chart that I'm looking at SPY on the 3-minute, and I've already drawn some pre-market levels that I figured would be a factor, and as well as some prior day levels. As we can see over here, after FOMC minutes, when the 75 BPS rate raise happened, we had a big move up, yet we could see some rejection here. So I wanted to see if this previous resistance, which held up this large move, was going to factor in later on. And then I also want to call out, so you could see pre-market high as well as prior day high, this pre-market level here, which this little fall happened after jobless claims data came out, and then we proceed to move up again. And then we also have the pre-market low, which also corresponds with this prior day level. And then the other thing that I drew on this chart is this little 15-minute uptrend. So the past few days, the past day really, we started this uptrend and we ended up breaking previous highs. So we made a higher low and then a higher high. And that's another reason why this level seems to have some sort of significance, because it was a retest of prior highs. Now, and I drew that trend line just to see if the possibility of this trend continuing would happen. But because there was such a big impulse move on FOMC minutes from the 75 BPS rate raise, I was concerned that we were going to give back a lot of this, because this is considered an imbalance where we have a large amount of buyers. And I was wondering if the imbalance would fill. Technically, for the imbalance to fill, it would come down to about right here. But I was more concerned with this point of resistance. And we'll go ahead and mark this just in case it comes into play here. So these are the levels I was going with on the day and the trend lines I was going with on the day. And then, of course, in the background, we have market net flow. So let me make sure that this is set right to July 28th. And this kind of spoils everything, but you can see how this looked like a bearish day, and this is what confused many traders, and we'll get into that shortly. So let's let this play out, and we can see as the day opens, we start to get an immediate rejection off these highs, which if you're an aggressive trader, you can take a put entry off of this. And the question, and then at this point, your first target would be this level. Your second target would be this level, which it does look like will hold. However, if you flip over to market net flow, you can see, and this keeps changing on me, I apologize for that. So let me flip this and we'll just take a screenshot here. And we'll leave this up. That way we can reference it as needed. So as you can see in market net flow, puts were rising while the price was dropping, which is exactly what we would expect. So we do get a confirmation. So we get this level hold, and then we fall lower as puts are on the rise and as calls are flat. So that is a bearish indication. We even had the bearish market net flow cross. So going back to the chart, you can see as we're coming down, I want to start to see if these levels are going to hold. Now, one thing I should point out, market net flow is a confirmation tool. It is extremely important. It often does act as a leading indicator, but it is secondary to price action. And the way I view market net flow is just extra details into volume. So you can see we're holding this level from the prior day, which is no surprise, because previous strong resistance usually becomes previous strong support. So as we hold this level, we start to chop around, yet market net flow is getting more and more bearish. So this would be a reason to start lining up short entries. However, I wouldn't take short entries until we get a break of this level and a retest. And I would like to see the 15-minute trend break, right? So short entries up here, perfectly fine. Makes perfect sense with market net flow. However, and let me just pause this price action for a second. When we see when we see it holding that prior day level and we're still with trend, because market structure and price action are the number one and most important factor, we are at this point diverging from what market net flow is showing us. Now, one thing that's interesting, and you can see it on the market net flow chart, which I'll draw a line here, we start to get this triangle, this descending triangle, or this actually it's more of a wedge pattern, right? So this is a technical pattern that you can use to, if you're a breakout trader, you can look for a breakout in either direction, right? So if we see it break down or break up, we can take a play off that. Now, the way this looks on the chart, let me just draw the lines here so we can see, and this is what gave me pause, why I didn't immediately get into shorts, because we were nearing what I figured would be the bottom because of this trend line, because of this level. And even though market net flowing was still showing bearish sentiment, I needed to really see this breakdown to to open up new shorts or new puts. And the fact that we broke to the upside tells me I should actually be looking for calls, and then at that point looking for market net flow to catch up. And just because it breaks to the upside doesn't mean you need to immediately take a trade. You still want to see confirmation, which we do end up getting that confirmation here. As this level holds, as this little volume gap holds, we get this little retest. And as we get that retest, which is happening right here on market net flow, you can see that puts up top are starting to diminish. They're starting to go down. And then on top of that, calls are starting to increase. So now we're getting, excuse me, it would be right here. So calls are starting to increase, puts are starting to decrease. So that is a bullish indication. Now, the market overall, it still has more bearish sentiment, but despite that, the price action is showing us that this thing can come back. So as we get this level hold here, this actually would be a decent call entry for a more aggressive trader. Now, you can also wait, right? So you can wait to see if we're going to break the high of day, or at least break these other levels that came into question. You can see we sort of blew right past that level. This was also at the time the value area high, which we're holding. Another great call entry, especially because we get confirmation that market net flow, again, despite puts being above calls, we are seeing that shift. We are seeing puts diminish, so a lot of put selling happening and a lot of call buying happening, which are bullish indicators. And the other thing that I want to point out here is as we start getting to this level, and if we drop to the 1 minute, you can actually probably see that a little more clearly. So okay, actually it happened back here. So along with this level hold, another bullish indication we had on the chart was this flag. So this flag is a bullish continuation sign. So we had this wedge essentially, which caused a reversal off of this key level from prior day, and also holding the overall 15-minute trend, which we can zoom in and see here. We're holding this overall trend. But on top of that, we had this little flag, which is bullish confirmation. That would be another reason to get into this play. Now, as we start coming to highs, the question is going to be, are we going to break and retest those highs and go higher, or are we going to hold that and start going down? Now, if you're looking at market net flow from a bird's eye view, it looks like we're probably going to fail that level and move lower. But notice what happens here is that puts and calls start going flat essentially. So if we circle this area, they go flat, which essentially means that price will also probably stay flat during that period of time. So let's just let this play out. When we break this previous high, if we're going to break this high here, so yep, we do. Now when you see a candle like that, that is a very, very bullish indication, where like these full body large candles, and you can actually take a market order off of something like that. Your stop would just essentially be if we break back below that level. And you can also look for a retest, which we do get somewhat of a retest, but that was so strong of a move that it's usually not likely that we're going to retest exactly on that level. So that level's been defeated. And now we want to see what happens as puts, since puts calls pretty much caught up to puts and they start to flatten out. We want to see what happens here. Now, unfortunately, I can't really show you the 7-day expirations. Those actually looked more bullish, which is a reason to look for lower time frames. If you're not familiar with how to do that, you can go over here to expirations and click 7, and that will show you during the day. It doesn't work that well for the historical data, but during the day while it's happening, it's a great way to get better insight into the move. And you typically see these transitions, these changes in sentiment happen more quickly. But it is important to watch all time frames. So as we would expect, we start chopping around here, and puts and calls are flat. Puts do start falling a little bit at some point, but they do go back up. But overall, there's not any significant shift. If we look here, if we draw like a level on the to see where we're at with net puts, there's not really too big of a change. They don't really break, but what does start to change eventually is these calls. So we get this little uptrend here as calls continue to catch up to puts. Now, we want to pay attention what that means for the price action as we continue to move on here. So as this plays out, what we're looking for is little nuances. So you can see that every time as we consolidate in this area, not only are we consolidating, but we're making higher lows and we're making slightly higher highs. And again, we get this sort of wedge pattern basically, or kind of an ascending triangle depending on how you look at it, and we're stuck at this value area high. So again, if we see a breakout of this zone, we want to get into calls. As long as we don't see any really significant changes on market net flow, meaning puts just rocket up or calls just rocket down, as long as we don't see that, we're safe to play the current price action that we're seeing. And so we do get this breakout, we get a little minor retest, again, perfect call entry here. And we essentially just want to keep playing the chart at this point. And again, we're just looking to make sure that we don't see any wild significant divergences. And actually what we do end up seeing is more confirmation, because we have calls eventually do cross puts as puts diminish, as puts go down this way. And then we also see, so we have this market cross eventually here as well. And SPY's price, it's just gradually confirming that. So they are indeed in tune with each other. But the thing that confused many, many traders was how long these net puts stayed above net calls. But that's why it's important. We always need to take into account price action. We need to take into account volume on the chart. And we need to really play the chart first and then look for ways that market net flow can confirm what we're seeing. Like I mentioned, it typically is a leading indicator, but not only. And that would have actually kept you out of trouble here and led to some really great trades if you're focusing on price action as number one. And I also recently did a video that you should check out it talks about what I consider to be the ultimate trade, all the factors I look for when entering a trade. And I won't recap them all here, but one thing I want to point out is what's happening here with these volume gaps. You can see as these volume gaps form on the chart. Oh, that's terrible. Let me actually draw a rectangle here. So you can see as these volume gaps form on the chart on the volume profile, you can see these are areas that we're holding in. So we break through this volume gap, we create all this volume, and we hold above it, which is one thing I really love to see. You can see we have the same thing here with these volume gaps on the periodic and on the visible range. And at this point, we can actually stop this chart. And we just proceed to continue to move higher. But yeah, basically these are the things that I look for with the price action. You know, are we holding, do we break and hold above previous highs? Are we holding these volume gaps? If you measure this with Fibonacci's, how far are the pullback? Is it fit in line with overall market structure and overall trend? And then market net flow is just one of many things that I use to confirm what I'm seeing and decide how confident I am in the trade. So anyway, I hope that helps, and I hope that sheds some light on how you still could have had a profitable day if you were prioritizing price action, which in my opinion should always be the number one priority. What's happening on the chart is the number one most important thing. So if you have any questions or comments, feel free to let me know. Reach out on Discord, Twitter, YouTube. I'd be happy to hear from you, and I appreciate you watching.